For group accounts, is very, very simple. Provided you can follow the principles that are associated with the group accounts. What are those 3 principles that are associated with the group accounts? Like when you are talking about foundation to the group accounts, the foundations to group accounts, meaning what are those things you need to know very well as regarding group accounts? One of it is the definition of terms. Two is the group structure. Three is the cost of investment. How can we acquire? 4, when you are talking about goodwill calculation, we have 5, valuation of NCI. How do we value NCI? And who is NCI? 5, valuation of NCI. 6, net asset. Net assets of subsidiaries. Net asset of subsidiaries. Then retain earning. Retain earning of subsidiary. 9, investments in associates. These are what we are going to be doing in the next 1 month. This is what we are expected to know. But no issue. Before we even go to this, you need to know investments and what is the group in itself, which I will run for you. The rest are sure you will get it very well. You will get it. We will solve question 2. So many questions so that you can also understand. Now, what do we call investments? That is the first thing I want to let you understand. Investment as regard to group accounts. Investment as regarding to group accounts. What do we mean? When you hear group account, what comes to your brain? What do you think? Yes, let's start from this. Don't forget, one person cannot call himself group. A person cannot call himself group. Why? Because when we are talking about group, we are talking about more than one person. Good. Then I will share you what I'm saying to start, but before then, yes, these are the basic things in group. But before we go there at all, to explaining all these things, let me tell you what is investment, how it affects group. Listen to me, you'll get it. There's no issue. Let me share my board. Okay. My brothers and sisters, if you are hearing group account, think of one thing: shares investments. Think of shares investments. This is group. Or better still, shares acquisition. Somebody who acquire shares in another company to have a control. So think of shares. What are the line of investments as now related to group account? Line of investments as related to group. Let me show you the line of investments in group. We have 3 possible investments in group accounts. 3 possible investments in group. If I acquire shares in any company from 1% up to 19% investment, what type of investment is this? It is called ordinary investment. Ordinary investment. Or they call it trading investments. Or some call it simple investments. What is key to know here? The acquisition of shares range from 1% to 19%. How do I account for investment of this nature? Mr. Awasi is going to teach you very well. It is known as IFRS 9. Is used. IAS 32. How do we present? IFRS 9 talks about measurement and recognition. Any investment that you acquire, that the percentage range from 1% to 90%. Then the disclosure requirements. IFRS 7. This theory is what we use. You see, all these investments are financial assets under financial instruments. That is why if you buy a shares in any company, you are buying an asset. If you buy shares in GTB now, You are buying an asset. You have shares in your hand. You are a shareholder. GTB has the ability to deliver dividends to you. That is why it's an asset to you. But to the issuer, it's a liability. But this one will be discussed very well by Mr. Wasiu, my second, the team lead. Now, I will now apply this in a question in the later period. We are communicating, so no issue. Now, from 20% now, if I have investment from 20% up to 50%, what type of investment is this? This is known as associates. Associates. Which accounting standard do we use to account for associates? IAS 28, equity method. My brothers and sisters, don't forget, I am buying shares from 20 to 50%. What do I need to know about associates? What is things to know about associates? When associates impaired, impairment in associates. 2, loan to associates. 3, unrealized profits on inventory. Then we have share of profits or loss. The last one, dividend paid by associates. These are the things to know about associates. All this in a circle belongs to associates. They belong, but no question can carry all these 5. But don't forget which investments. How do I know it's an associate? From 20 to 50%. Do you get the logic now? That means I bought a shares in any company from 20 to 50. Now, there is a joint ventures. We are coming there. But look at it. From 51%, if I have investment from 51% up to 100%, that means I buy shares in any company from 51% up to 100%. What type of investment do we call this? This is subsidiary. This is where we are going. Subsidiary. That is where we are going. How do we account for subsidiary? How do we account for subsidiary? 1, there are about 3 or 4 standards that is important here. We have IFRS 3, who talk about business combination. We talk about IFRS 10, consolidated financial statements. we talk about IFRS 12 and 11. Then we also have IAS 27 here. These are the standards that we use to prepare the accounts. Now, my brothers and sisters, don't forget, when does the control exist? Immediately you buy shares above 50. From 51, you have control. Immediately you buy shares in any company above 50%, you have control. You now see the day you have control, is called the date of acquisition. The date of acquisition. The day control is gotten. And you acquire shares 51%. That is the date of acquisition. Get the logic. Yeah. Before we go further, oh yeah, any questions so far? Follow me. Any question for me? Don't forget, line of investment is just 3. What do we mean by line of investment? Shares investment. What is share investment? It's shares acquisition. You acquire shares. So if I have investment from 1% to 19, that means I acquire shares in any company. The rate from 1% to 19 is a simple investment. Which can also be known as trading investment or ordinary investment. But if I have investment from 20 to 50%, I use IAS 28. There is joint venture yet. But let's leave that for now. I don't think it's the syllabus of FR. Okay? Then from 51, we have control to 100% date of acquisition. Now, don't forget, I have listed the foundation for you. Because we don't have time, exam is around the corner. I'll quickly rush what is needed to be known in the foundation and go to the question. After the foundation, the word I'll first of all lay emphasis this night is this. This night, I will tell you who is here, how does he value, so, blah, 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 blah. Good. Now, I'll give short summary. Let me share it of what is supposed to be known. Good. Simple group. Under group account. According to your syllabus, you say you should know simple group and associates. Then, after you have understood the group very well, I will still go back to the cash flow, which is the group cash flow. It's in your syllabus, but it's not tested before. But we don't want you to go to the exam without having knowledge or idea of so many questions that can be tested. Therefore, I will take one question or two on group cash flow. The rest are sure. So far you have no simple cash flow, you will know group cash flow. Now, group. Group account is the account of the parents and it all subsidiaries, all the subsidiaries prepared and presented as if they are a single entity. That's what we are going to be doing. That is 1 plus 1 cannot be 1. 1 plus 1 is 2. How can you say company A and complete B are one. It's not possible based on legal reality. But we are preparing this account based on what? Substance over form. What do we mean by the economic reality? Is different in totality with the legal form. Just like marriage. In marriage, husband and wife are being joined together and they pronounce them as one. But in the faces of the law, they are not one, they are two. But in the faces of the imams and the soothsayer, the pastors and co, we regard them as one. That is what the Holy Bible and Holy Quran make us to understand. The substance is different from the legal perspective. Now, the same thing, group accounts. The other one has bought shares to the extent he has control. He can now manipulate the resources of the other person. According to IFRS 10, he has control. He can manipulate. That means the other one is under him. They are one. That is what we mean by the substance over form as related to group accounts. Because control exists. It can manipulate the resources of the subsidiary. Now, what are the accounting standards? Don't forget. All the accounting standards, they are interwoven. The accounting standards we use to prepare group accounts. They are not in isolation. They are interwoven, intermingled with each other to give us a result that we have today. One cannot say, use this method. The other one say, no. They are in same accord. What are those standards we are talking about? IAS 27. We talk about IFRS 3, IFRS 10, IFRS 11. They are interwoven with each other. Okay. Now, what are the exceptions not to consolidate? Before we go to the exception, what are the brief definition of some important concepts about group accounts are given below? Group, parent, and all the subsidiary. Subsidiary, an entity that is being controlled by another entity. Just like wife, that is being controlled by the husband. An entity that is being controlled by another entity. Who is the entity that controls subsidiary? Parents. This is what we are saying. Let's say two companies, Eco, Bico. Eco acquire 80%. Yeah. He acquire 80%. There is two owners to Bico, but does he have control? Eco has control of Bico? Yes. What is Bico? Subsidiary. The entity that is being controlled by another entity. Who is Eco? The one that has control? Parents. But he does not have 100% control. He only has 80% control. Parents, which is Eco, they can call it the name Eco or parents. They can also call it holding company. They can also call it acquirer. He has 80%. The remaining 20% in subsidiary is known as NCI, the non-controlling interest. The non-controlling interest. That is the shares that was not acquired by the parent company in a subsidiary. The share that is not acquired by the parent in a subsidiary is known as NCI. So NCI has only 20%. Two owner to subsidiary. This all. We have parents that has 80%. We have the non-controlling interest. Interest that has 20%. Non-controlling interest is called minority interest. Before the IFRS came, when IFRS now came, they now refer to them as NCI, non-minority. So there will not be NCI if in a subsidiary company, if 100% acquisition, that means a parent acquire 100% of the shares, no NCI. Yes. Let's go back. Controls. An investor controls an investee. When investor is exposed to or has right to variable returns from investment with the investee and has ability to affect those returns. He has ability to manipulate. That is why if he cannot manipulate, if he does not have control, we cannot reverse to it as parents. Then business combination, add it together. Acquisition date, the day the parent has control. Then, who is an acquirer? Who is an acquirer? Acquirer is the same thing as the parent. The only thing that differentiates acquirer and parent, sometimes it might not have to 50, which is acquirer. So take notes. Acquiree, the person they acquired. Exception not to consolidate. IFRS 3 permits NCI or subsidiary not to consolidate, provided these four things happen. One, if If the parents himself is the only one, is the only one if parents itself is only one subsidiary or partly owned subsidiary of another entity, that means the parents also has parents. If the parent also has parents, you see, if the parent is only owned, the parent also has, you cannot consolidate. The one with regards to parents also has parents. Then secondly, if it is debt is not traded on the stock exchange, if debt or equity instruments are not publicly traded, you cannot consolidate, you are exempted from consolidating. It is not in the process of issuing security in the public security market. So all those things, and lastly, the ultimate or intermediate parent publish consolidated financial statement that comply with IFRS. The ultimate parents are types of subsidiaries. We have only owned subsidiary. That means he acquired 100%. This is a subsidiary which the parent company has controlling interest of 100%. That is not controlling interest does not exist because the parent acquires the entire entity shares of the subsidiaries. Partly owned subsidiary. This is a subsidiary. The parents has shares more than 50, he has control, but he does not acquire 100%. Fellow subsidiaries, when two or more entities are under the control of a parent, just like somebody who married two wives, they are under the control of a single man. They are fellow subsidiaries. Sub and foreign subsidiary is not in your syllabus. Just is when you get to see how it's. Okay? Now, group structure. Okay, let's do cost of investments. How can we acquire it? What are the ways to acquire it? What is cost of investment in itself? Measuring the cost of acquisition. That is the consideration, cost of investment. How much someone paid. IFRS 3 states that the purchase consideration for an acquisition in a business combination is a sum of the fair values at acquisition date of the asset transferred by the acquirer. Don't forget who is acquired parents. Such as cash. 2, liability incurred by the acquirer to the former owner of the acquiring, equity instruments issued by the acquirer in exchange for the control of the acquiring. In summary, that's what you need. This is the amount of and the fair value, anything a party will, of consider giving up to acquire a subsidiary by a parent company, which includes the following. How can we acquire? We are getting there now. I can decide to pay cash, shares, deferred, contingent consideration, loan notes, then combine more than one cause of investment. Don't forget, my brothers and sisters, all these costs of investment, you must know it. Now, but for the next 2 weeks or thereabout, we'll first of all limit to cash. Immediately you have gotten the question, you are now saying that things are stable, I will increase the level of the question. So I'll be tracing the question small, little by little, to where we get to destination. Okay. What are the major components in group accounts? One, we are talking about group goodwill. Goodwill, non-controlling interest, retained and associate adjustments. I will show you all the adjustments. Goodwill is a major component to be tested in the exam. It can be classified into two: positive goodwill. There's nothing like positive goodwill, just goodwill. I cannot say +8. Say +8. No, 8 is positive already. Therefore, to declare, find the first one, the second one. That's why we normally put it. Negative goodwill minus gain on purchase bargaining, which we are going to know very well. Anything that you go to the goodwill calculation must be at the date of acquisition. Anything that you go to the goodwill calculation must be at the date of acquisition. Must be at the date of acquisition. Everything. Any item that will go to goodwill calculation must be at the date of acquisition. That means, don't forget, post-acquisition events does not concern goodwill. With that, what is the formula to calculate goodwill? Let's start the calculation from there. Let me show you the formula. But before I go to the calculation, please, as you are following me, I really love that. Any question? Any question for me?
Hello, sir. Good evening, sir.
Yes. Good evening.
So my question is around the acquisition. You did mention that so from 20% to from 51% to 100%
Yes.
is subsidiary.
Yes.
Has there been a case where we have something like 50.5 or whatever?
There's nothing like that in the question. But you cannot rule that out in a real life situation. But immediately you acquire more than 50. That means when it comes to voting, nobody can dislodge you. But for example, purpose, you can have not say 50.5, 50.3.
So would it make sense to say that so for acquisition to be qualified as subsidiary, it has to be above 50%?
That's what we are saying.
Okay. All right. Thank
That's
you
what
very much.
you are welcome, my brother. Next. Don't forget, we said goodwill must be calculated in all group accounts. But it might be negative goodwill too, which is gain on purchase bargaining. I'm still coming to that place. Let's take it a step ahead. But don't forget that any investment that from 1% to 19, simple investments. From 20 to 50, associates. From 51 is when we say subsidiary. As my brother has rightly put it, shares above 50. But the day you acquire shares above 50, then you have control. You have control. That is why in marriage, what is the date of acquisition? The day the pastor pronounced them husband and wife is the date of acquisition. The man has control. The shop pastor will let the person know that you cannot kiss the bride. But unknown to the pastor, the man has been kissing since all these days. He has control over everywhere. But the pastor was just thinking that the date of acquisition is there he pronounced them. And now you cannot have your wife. You have access to her body. That's exactly what we are saying here. Now, let me now give you the formula to calculate goodwill according to Ivan 3. How do we calculate goodwill? Look at the formula. Which goodwill are we talking about? The goodwill that comes as a result of business combination. What do we mean? As a purchase goodwill. It is when I acquire a subsidiary that have goodwill. You cannot see goodwill in any other company's accounts. Before you can see goodwill in any other company account, it means you must have at least a subsidiary. Get the logic. That is why a single entity cannot say he has goodwill in his book, financial statement. No. The goodwill must come from a business combination, a purchase goodwill. That means a company acquire another company. Now, what is the formula given by IFRS 3? Said cost of investments. Don't forget, we say cost of investment can be cash, can be shares, can be share consideration. Thank you. Can be deferred. Can be deferred consideration. Can be contingent. Consideration. Can be loan notes. And it can be combination of more than one of them. Yeah. But I lay emphasis that for today, we are still going to deal with only cash alone. Meaning we are not dealing with anything other than cash. So, for the goodwill, cost of investments, add SCI. After adding the SCI, it will not give me purchase consideration. Purchase consideration. This will not give me addition of the two. I will not less the net assets at the date of acquisition. This can either give me goodwill or gain or purchase bargaining, which is known as which is known as negative goodwill. We are still coming to that. This is the formula given by Everest 3. Any question based on the formula? The answers are no question. The answer is no question. Let's talk about SCI and net assets. Who is SCI? The share that's not acquired by the parent. Yeah, look. How do we value SCI? SCI. SCI can be valued in two ways. It's either we use fair value or share of proportionate. Get the logic. It's either we use fair value or share of proportionate. Another name for fair value is how you call it full goodwill. Full goodwill method. Or you call it gross goodwill. For share proportionate, net assets method. Or you call it partial goodwill method. Now, in exam, how do I know it is fair value? What are things I will see in that question? You call it indicators of fair value. What are the indicators of fair value? What am I going to see in a question that warrants me to calculate goodwill using fair value? That means SCI is valid at fair value. They are just four. One, market price per shares of subsidiary or NCI will be given in the question. That is one. The question will provide for me market price per share of subsidiary or NCI. That is number one. Let's take test one for you to see. Let's test one. Go to your question. Okay. Let's take reprice PS. Reprice PSC. Just wait a minute. Let me open it. A minute. Are you seeing what I've shared? The question with which is sent to you? Reprice. Let's see. Follow now. Okay. Now, if you go to Watimagbo and Warisi question, if you look at it, it is the group policy to value not controlling interest at fair value. The market price per shares of not controlling interest shareholder just before the acquisition was what? 1.5 kobo. He said they give you the market price per share of subsidiary or SCI. I will now ask the question. Oh yeah, let's get the value of SCI now. Let me share so that we can get the value of SCI. Let me share a new screen. Good. Let's go to be sure I'm showing the screen. Okay. Now, can somebody read for us from the beginning that particular question? It's in your book. I've sent it to you. Now, let's read from the outset. He has given me the market price per shares. What is the market price per shares? He has told me it's the group policy to value not control as fair value. And the market price per share did not control just before the acquisition was 1.5 kobo. Look, we are only talking about shares. Don't forget. Shares acquisition. Shares of who? Subsidiary. The first account is for the parent, which is Watimagbo. The second one is the Waris. He acquired shares in Waris. They've given me the group structure. Watimagbo acquired 70% equity shares. Now, how many shares that is in Waris? 170 at a nominal value of £1. I will go to the question to determine the SCI value as at the date of acquisition. Very simple. I will just look at it. I will say group structure. Given in the question, parents 70%, NCI 30%. He has given me market price per shares of sub, which is an indication is fair value, £1.50 kobo. I will ask myself, what is the total numbers of shares in subsidiary equals to values of shares all over nominal value. Values of shares all over nominal value, which is 170 in Waris with a nominal value of £1. 170. It means 100% here. 170 is the 100% unit of shares. that exists, and the parent only acquires 70. So analysis of share parents 70%, 0.7 times 170. NCI 0.3 times 170. The total shares must be 170. 0.7 times 170. What does it give us? Help your brother.
$119.
NCI 30% of 170 or 170 minus 1.
51.
One. And that's the value of NCI at the date of acquisition. It's 1 times 1.5 cover. That is it. What does it give us?
$76.5.
That is it. Any question?
Yes, sir. So how did you get your 170?
We are talking about shares acquisition. When you get group account, think of shares. Go to the financial statement they will give you. The first account is the parent. We don't have any issue with the parent. What is the share capital of the subsidiary? Go and look. You will see the 170 there, which is in value. I will convert it to a number. Group structure, they've given me 70 in the question. Some question will not give me. They will just say he acquired 119. Out of how many? I'll just say, okay, 119 out of 170 times 100. It will still give me 70%. They will give me the shares acquired. Some question can come like that. No issue. It is only shares we are talking about. Is it clear? Or we should take another example.
It's clear, sir.
Now, follow me. Secondly, how do I know it is fair value? Second one, indicators of fair value. How do I know it is fair value? Second, fair value of NCI will be given in the question. No thinking is required. fair value of NCI. Fair value of NCI will be given in the question. Fair value of NCI. No thinking is required. Like the one we have done. What is the fair value of NCI? 76.5. I will just pick the figure. I add it to the cost of investment. I'll just add it here, 76.5. No thinking is required. No calculation. The question will tell you the fair value of NCI. Let me show you. Let's look for a question. Example. It is the group policy to value NCI at fair value. At the date of acquisition, the non-controlling share was valued at 80 million. No, they will not give market price. They will just give you the fair value direct. No thinking is required. They will just give you the fair value of NCI. Third one. Third one. Fair value of the whole subsidiary. I used to fear that they should not give students this one. I can have tested it twice. They don't used to see it. They will mix it up with this one. Third one. And it's very easy to identify. Fair value of the whole subsidiary. That is 100%. That is 100% acquisition. Fair value of the whole subsidiary. That is 100% acquisition will be given. Given in the question. How do I differentiate this one with that first one? Students used to mix the two together. To differentiate it, this one will mention the name of the subsidiary. You will mention the name of the sub. Why this one will say the fair value of NCI? Get the difference between the two. I will use question to stress on it so that you can see. This one will say fair value of NCI will be given in the question. This one will say the fair value of the whole subsidiary. It will mention the name of the subsidiary. Let's go to question. You will see. Very simple. Yeah, Baron PS. Let's go to the group policy. I mean, you have understood the foundation. All this one will start going, all the questions. You start solving 2, 2, 3, 3. It is the policy of the group to measure non-controlling interest of acquisition using Fuguri method. For this purpose, the fair value of Valeta, It will tell you the fair value of Valletta PSC. It will not say fair value of NCI. It will mention the name of the subsidiary. I will now look. Meaning, if you want to acquire the subsidiary at 100%, how much are you going to pay? That is what he's saying. 66 million. Does he acquire at 100%? Let's see. I will now go to the question at the beginning. Let me solve the question for you. That part. I will determine the value of NCI now. Baron acquired 3 million shares. I will say out of how many does he acquire the 3 million to determine the group structure? Oh, 8. I'll go and convert. 8 million. What is the nominal value? 2 naira. Okay. Let me share the solution. Let me solve it for you to see. Now, fair value of the whole subsidiary. Baron. Look at it. He acquired 3 million. Acquire shares is 3 million, which is 3,000. We've removed 30. I will ask, out of how many does he acquire the 3,000? Total numbers of shares is subsidiary equals to the values of shares all over nominal value. What is the values of shares? 8,000. At a nominal value of 2 naira, naira cancel naira. We have 4,000 shares, units. These are 100% units at 2 naira each. Then, can I determine the group structure? Yes. I can determine the group structure. How? The 3 million that you acquire over the total shares of 4 million times 100. How many percent does he acquire?
75%.
He only acquires 75%. That means parents 75%, NCI 25%. They've given the fair value of those subsidiary. If you want to acquire 100%, and as a value of NCI at the date of acquisition, which is 66,000. It does not acquire. If I want to acquire 100%, I will pay 100,000. It does not. I'll pay 66,000. It does not acquire 100%. Will you acquire 0.25? 66 times 0.25. Times 0.25.
16,500.
16,500. That is it. Fair value of NCI 16,500. I'll just go to the goodwill calculation. Fair value of NCI 16,500. Oh yeah. Ask question. Ask question. How do I differentiate fair value of NCI from fair value of those subsidiaries? How do I differentiate the fair value of NCI? Fair value of those subsidiaries, you mention the name of the company. I cannot miss it up. I used to wonder why the student miss it up. You will mention the name of the company, fair value of so. You will not say fair value of NCI. That is the difference between the two. Any question? Any question? Lastly, on fair value of NCI. Lastly, the question will give me goodwill attributed to NCI. Lastly, what one? Indicator of fair value. What one? Question will give me goodwill attributed to NCI. The question will give me goodwill attributed to NCI. Goodwill attributed to NCI will be given in the question. This was tested in 2017. Look at it. Let me show you. Hush puppy. Hush puppy PSC accounting for non-controlling by valuing it as fair value. The fair value of the goodwill attributed to non-controlling interest is 18,250. 18,250. The question will give you goodwill attributed to NCI. My brothers and sisters. My brothers and sisters. It's only 4 ways. It's only 4 ways I can know that NCI is valued at fair value. They cannot give me 2 in a question. It can only be 1. The question I decided to test market price per shares, like 2 days ago. Market price per share, the brick. The question I decided to tell me is the fair value of NCI. Direct, give me NCI. You might decide to tell me, give me fair value of the whole subsidiary. That was in 2018. Mama and Papa question. 4th one, the question I decided to give goodwill attributed to NCI. These are the 4 ways. Let me now say it. I will ask the question, what is the group policy? The question will tell me, it is the group policy to value NCI at fair value. However, listing. However, it does not give me group policy, but it gives me indicator of fair value. I will use fair value. It does not give me group policy, but I have seen indicators of fair value, like 3 days ago. That the Wamomiwa question. Is that the Wamomiwa question? One of the questions. He has given them indicators of fair value, but it does not give them group policy. I will assume it is what? Fair value. Good. Let's go to share proportionate. What is share proportionate? According to IFRS 3, proportion. If you hear proportion, sharing the net asset based on, that's why we call it net asset method. Share the net asset based on their proportion. It can only happen in 2 ways in exam. 1, when the question is silent, no indicators of fair value. It does not tell me anything about fair value. No indicators of fair value. The question is silent. No indicators of fair value. No indicators of fair value. The question, what do you mean by with no indicator? The question will not give you market price per share of subsidiary. It will not give you the fair value of SCR. It will not give you goodwill attributed to SCR. It will not give you fair value of the whole subsidiary. You will not see it in the question. It is silent. That means it is share proportionate. Two. Company policy. You will see it in the question. It is a company policy to use share proportionate method. That is the two ways you can know it is share proportionate. How do I understand share proportionate? I must know net assets. Net assets say we share based on the growth structure. Share it. Share based on the growth structure. We should share. So what is now net assets? What is net assets? What is net assets? My brothers and sisters. Net assets. According to IFRS 3, net asset of subsidiary at any day. As at the date of acquisition, as at the date we are consolidating, net assets equals to equities. According to, it's a net asset and equities. Don't forget, what are the equities? I will sum it. 1, share capital. Net assets. 2, share premium. Add. 3, the money I don't spend, retain earnings, which can also known as accumulated profits, undistributed profit, retained profit, revenue retained, then revaluation surplus. But be careful. The revaluation surplus can be in the book already or happen at the date of acquisition. Then lastly, other equities components. Then any adjustment to the net asset as a date I'm acquiring, don't forget, no question can give you all the 5. Net asset as share capital, share premium, retained earning, other component of equity, revaluation surplus that is in the book or happen at the date of acquisition. No question can give you all the 5, even at final level. Then adjustment to the net asset. Addition of everything will now give me total net assets of subsidiaries. Out of these 5 net assets, which one is a must? Share capital is a must. Is no question, they must give you the share capital. Secondly, retained earning is a must. These 2, the remaining are optional. The retained earning, they might decide not to give you when it is doing there, we will calculate it. It's a must to know. So addition of everything will not give us the net assets. Now, it means for me to calculate goodwill, Look at it. For us to calculate goodwill now, we've known the cost of investment. We've known how we can value NCR. Addition of the two will give us purchase consideration. Then we less the net assets. Then we can get goodwill again or purchase bargaining. My brother, wait you. Before we now go to the first calculation on goodwill this night, look at it. My brother, any goodwill derived when NCR is valued at fair value. Please pay attention to this one. Any goodwill derived when NCI is valued at fair value, when NCI is valued at its fair value, the goodwill belongs to both the parents and NCI. When NCI is valued at fair value, the goodwill we have derived when NCI is valued at fair value, that is full goodwill method, the goodwill belongs to both the parent and NCI. Secondly, any goodwill derived using share proportionate method, the goodwill belongs to who? Parents only. My brother, any goodwill we have derived when NCI is valued at share proportionate, the goodwill belongs to who? Parents only. Now, but remember, even in fair value, please remember, even in fair value, the goodwill of the parent is share proportionate. But remember, even in fair value, the goodwill of the parent is share proportionate. Meaning, the goodwill of the parents, that is, in summary, the goodwill of the parent is share proportionate in any method. The goodwill of the parent is share of proportionate in any method. That is what he's saying. You do not understand what I've just said now. Yeah, I'm sure. If you understand, tell me. But you understand with calculation. Yeah. That I will put calculation to it, you will see. Let's go to the calculation. Okay. Oh, there's no good calculation yet. No problem. Let's check the one. There's no good calculation. I'm coming. Let's wait. I'm coming. Let me send it to you now to see. You will not see it. Go to your platform. I'll send it to you. Go to the platform. The first calculation of goodwill. Look at it here. For example, a parent acquires 600 million equity shares in subsidiary. A parent acquires 600 million equity shares of a subsidiary 2 years ago for 1.2 million. The subsidiary equity share capital on that day was 250,000, denominated at 25 kobo per shares. Other components of subsidiary net asset at acquisition date were share premium 550 retail earning. 68. The subsidiary share were quoted at the market, quoted at the stock exchange of 180 kobo per shares as at date the parent took control. That is fair value. He has given the market price per shares. Then A, calculate goodwill on acquisition if it is the policy of the parent to measure non-controlling interest at fair value. That is one. B, calculate goodwill using share proportionate method and explain what accounts for the difference in the use of the two methods. You will see the two now. I'm going to ask you, you see. Now, please, somebody open it for me. Please do me a minute. I did not share it on time. Let's go to solution. Let me share my part. Let me share my part. Okay. Done. Let's. Okay. Don't forget the question says I should calculate goodwill. Say goodwill using fair value. Goodwill. Coming. Let me pick another color. Which color can I pick? Okay. It said 1A, calculate goodwill using fair value. That is one. The same formula. Cost of investments. Add NCI. Purchase consideration. Net assets. At the date of acquisition. Then goodwill. The second one, he said I should calculate goodwill. Goodwill. Using SP, share proportionate method. The same formula. Cost of investment. Add NCI. Purchase consideration. Net assets. At the date of acquisition. Goodwill. That is it. Now, let's go to the working. Working. Said, somebody should replace. My sister, please help me. It's on your platform. Let me read the question.
A parent acquired 600,000 equity shares of its
Oh, yeah,
subsidiary.
thank you. You acquired 600. Good.
Of its
Yeah,
subsidiary 3 years ago. Full stop. For 200,000.
Cost of investment, 1.2 million.
The subsidiaries issue equity shares capital on that date was 250,000 naira,
Oh,
denominated
check up. Denominated at.
at 25 kobo per share.
Oh, good. He has given you the values of shares. I can get the total numbers of shares now, which is the values of shares all over nominal. What is the values of shares? So it's 250,000. Denominated 0.25. This will give me 1 million. Out of the 1 million, parent acquire 600. You can calculate the good structure. I say 600 over 1 million times 100. That will give me 60%. That means parent is 60%. Parent 60%. NCI 40%. Good. Good. Next, my sister.
Other components of the subsidiaries' net assets at the date of
Other
acquisition.
components at the date of, don't forget net asset are 5. No question can give you the 5. He said net assets at the date of acquisition. Share capital. The first one, which has given me 250,000 naira. Share premium. What is the share premium? Share premium.
550,000.
550,000. Then retail earning.
680,000.
680. That is it. I will now total it together. I will total it together. 250 plus 550 plus 680.
1,480,000.
1,4. I'll put 1,480,000. Next, my sister.
The subsidiaries' shares were quoted at the stock exchange at 1 naira 80 kobo per share at the date the parent took control.
Market price per share of subsidiary has given me, which is an indication of fair value. 1 naira 80 kobo. Next. Is that all?
That's all.
Now, good. That is all the data in the question to calculate the goodwill the same way. I will now say, okay, let me calculate the goodwill. Cost of investment, 1.2. RDNCI, 1 million shares. Parent acquire 600. 400 belongs to NCI. What is the market price per shares? Times 1 naira 80 kobo. If it is fair value, how do I know market price per share of subsidiary NCI will be given? Fair value of the whole subsidiary. Goodwill attributed to NCI. Yeah. 400 times 1.8.
720.
I will now put 720. But if it is pure proportionate, the net asset, share the net asset based on the proportion. NCI is 0. Times 1,480. Because the net asset is 1,490,000. What does it give us? 0.4 times 1.8. What does it give us?
592. 592.
592. I will now add it. Purchase consideration. Somebody has chatted. Let's see. What is he saying? Oh, good. 592. I will now add the two together to get the purchase. 1792.
792.
I will now less the net assets. So give me the goodwill. But this will give me
312,000.
212,000. Why this one will give me 192? I will now less the net assets. 148. So give me the goodwill. Why is the goodwill here?
$440.
Hmm?
440.
440. Yeah, 440. Don't forget, we said the goodwill derived usage fair value. The goodwill belongs to both the parent and SCR. Who can give me the goodwill of the parent here now? What is the goodwill of parents? What is that of SCR? What is the goodwill of the parents? Who can give me?
$264.
How do you get your 264? Somebody has
0.6.
given it. Somebody said 312. Yes. Please don't multiply percentage on it. That is English I'm telling you. That's if you do not understand. What is the goodwill of the parents? It is share or proportionate, even in fair value. The goodwill of the parents, even in fair value, is share or proportionate. Ogajasi. Even in fair value, the goodwill of the parent, that person that typed it got it. It is share or proportionate. Even in fair value, the goodwill of the parent is share or proportionate. Even in fair value, the goodwill of the parent is share or proportionate. Now, I cannot get the NCI. But before then, what is the shorter formula for share or proportionate only? Shorter formula for share or proportionate. Cost of investment, 1.2. Remove parent portion of the net asset, 0.6 times 148. 0.6 times 148. 0.6 times 148. What does it give us?
880,000.
Thank you, my sister. Output. it will still give me the same thing. 312. We still give you the same thing. 312. That is the shorter method of share proportionate. Now, to get the goodwill of the NCI, I will now say 440 minus 312. What is 440 minus 312?
128,000.
NCI is now 128,000. Goodwill of NCI. Before we proceed, I can decide to get NCI first. I can decide to get NCI first. I will not get parent first. I want to get NCI. And that's okay. Goodwill attributed to NCI. NCI at fair value. I think it's 792,000. I became what is the fair value of NCI? Let's check. 720,000. Fair value of NCI. 720,000. Will come here. 720,000 minus NCI percentage on net assets at the date of acquisition. 0.4 times 14. 592. 720 minus 592. I can get to NCI first, 128,000. I can decide to get NCI first, 128. I can get NCI first. I want to ask you this question. Let me ask you this question. If question give me goodwill attributed to NCI, how do I get the goodwill of the parents? They've given me goodwill of NCI. Look at it. Let me share. Like, okay. Like, aya question. Oh, aya. So, aya Limited has a policy of accounting for non-controlling interest at fair value. For this purpose, the fair value of the goodwill attributed to non-controlling interest in Lower Limited is 48 million. The fair value of non-controlling interest. They will give me goodwill of NCI to get the total goodwill. How do I do that? How do I do this kind of question in exam? Who can tell me? How can I solve this kind of question in exam? If they give me goodwill attributed to NCI, 128,000, how can I get the total goodwill? How can I get the total goodwill of 440? You must try. You must say something. You must say something. If they give me goodwill attributed to SCI, I have two options. The first option, I will use share of proportionate to get the goodwill of the parents. I will now add it to the goodwill of the SCI. That is all. I will use share of proportionate, option 1. Anytime they give me goodwill attributed to SCI in any question, I have two options. Option 1, I will get the goodwill of the parent. Getting the goodwill of parents. Then add it to that of the SCI. SCI, give it in the question. That is it. I will add that option 2. Option 2. I will determine what is called NCI at fair value. My brother and sister, that is the difference between fair value, share proportionate, and fair value. What is NCI at fair value? Fair value. NCI at fair value means two things. Please, it's not complicated. If they give me goodwill attributed to SCI, you will see it. We are going to solve one question next week on goodwill attributed. I'll get the goodwill of the parent, add it to the one they give me. Correct. I'll get the total goodwill. Option 1. Option 2, I will get NCI at fair value. NCI at fair value is the combination, addition, summation of goodwill attributed to NCI plus NCI percentage on net assets at the date of acquisition. This is it. Goodwill attributed to NCI 128,000 plus 0.4 times 148 to give me 592. 128,000 plus 592. That will give me 720,000. After I've gotten my 720, I will now go add it to the cost of investment. I will add it to the cost of investment. To get the purchase consideration, I will now less the net assets. Anytime you see goodwill attributed to SCI, they've given you penalty to play it. My brother and sister, don't forget, fair value will only give us one answer, which I will do for you now. Look at it. Fair value of the whole subsidiary. If I want to acquire NCI as a whole, don't forget, market price per shares is 1 naira 80 kobo, and the share in the company is 1 million. That means the question, 1 million times 1.8. This will give me 1 rand. Fair value of the whole subsidiary. It will give me fair value of the whole subsidiary, 1.8. I will now multiply SCI percentage on the 1.8, it will now give me 720. Now, this is the summary of what I've been saying. Look at the summary for better understanding. The summary. Valuation. Valuation of NCI using fair value. 1. The question can give me 1 market price per shares of subsidiary, which is 1.80 naira times 400,000. Because NCI has 400,000 shares, 720. 2. The question can give me the fair value of NCI, 720. The question can give me 3. Fair value of the whole subsidiary, 1.8 million. I want to buy everything at 100%, 1.8 times 0.4, 720,000. The question can give me goodwill, attribute 4. It will still give you. That is why it cannot be 2. They cannot give you 2 of this. It can only be 1. The question can give me goodwill, attributed to NCI, 128,000 in the question. I will not get the fair value of NCI by now saying, okay, 128,000 plus NCI percentage on the net asset, 0.4 times 1.4. Now give me 128,000 plus 592,000, which is equal to give me what? So if it is fair value, be rest assured, no question can give you 2 of them. This is the way, the 4. My brothers, this is it. When it is fair value, 1 of them can only be given in the question. The question cannot give you 2. Why? Because each one of them gave us. It will only give you 1 answer. It cannot give us 2 in the question. If they give me market price, I can use it. I can still retwist the question to give me fair value of the whole subsidiary. If you give me goodwill, I can still retwist. But anytime you hear NCI is at fair value, is the combination, is the addition of goodwill attributed to NCI and the fair value. To proceed further, what is now the difference between fair value and share of proportionate? That is why we used to say no goodwill attributed to NCI when it is share of proportionate. Look at here. Let me tell you, what is the difference? Let me show you. What is now the difference between fair value? The difference between fair value and share of proportionate. Do they entitle to net assets? If it is fair value, yes. Yes. Goodwill income? Yes, that is the difference. No, the difference between fair value, you to look, what do we add? The difference between fair value and share proportionate. If they ask you any day, anytime, it is the goodwill attributed to NCI. This cause of. Look at it. What is the difference between these two? It's 128. Share of proportionate, no goodwill attributed to NCI. NCI is only entitled to net assets. In share of proportionate, in fair value, NCI is entitled to net assets. It's also entitled to goodwill. Addition of the net assets that he entitled to plus the goodwill is known as fair value of NCI. Ladies and gentlemen, I want you to go and look at this thing very well before the next class. No more story next class. Let me show you what we are going to be doing next class. Solving questions. Now, we will start with cash. This is the next target. To consolidate, is the parent plus subsidiary plus or minus adjustments. This I will now open. I will say open everything. After we have opened everything, I will now be showing you the adjustments. That is the end.